Good morning, YouTube. Louie here with the Bullion News of the Week. Boy, there is a lot going on. Let's start with spot prices. All right, we've got gold ended the week up 390 to 2,801 all-time highs, and silver shaking off some of those big gains from Thursday, down 34 cents to 31.28. The GSR is at 89.17 with, I'd say, downside looks like 283. If we get a longer chart here, you'll see that that could approach 80, 75, etc. Silver setting up for a run, it appears. 10-year Treasury up a little bit to 4.54 and strong as a result of tariff news. The more tariffs, potentially the stronger the dollar. Here is the dollar, 108.50, continuing its uptrend and probably has upside to 115, 125, I've heard some people say. So the dollar could definitely become much, much stronger on the back of these tariff stories. Looking at copper, an industrial metal, had a down day yesterday, down 3.5 cents to 4.27. In the pre-market, we are in the we're in the neutral category on the Fear Greed Index at 46, and Bitcoin taking a hit over the weekend. Let's get to Bitcoin here. Where did it go? Bitcoin now under 100,000 at 99,169, and poof, it's gone. All right, let's keep going to gold prices. I'm not going to show you U.S. gold prices. You saw those all-time highs. Being somewhat triggered by disequilibrium in the markets between Europe and the United States. But also, if you look abroad, that rising dollar is really creating astronomical gold prices in other countries. So when the dollar is more expensive, gold priced in dollars becomes more expensive. In Europe, for example, in the EU, where the currency is clearly failing. And look at how gold has performed over the last year from about 1900 up to, what is that, about 2700. You think gold has done well in the United States. Well, if you are in Europe, you definitely wanted to be holding on to gold to hedge both the risk of fiat currency in those countries and of declining currency value in those countries. If we look at the same chart in China, you can see it is very similar. China going from 14.5 up to 20,000. Looking at the silver chart, which you may be interested in, here we are definitely in Europe breaking resistance here and threatening to move higher, but not at all-time highs or not even at intermediate term highs on silver. Over in China, silver is a little bit flatter than in Europe, but definitely a chart that is basing for a move, in my opinion. Okay, how will the tariffs affect the U.S.? Now, the new news today, if you didn't already know, is that Trump did double down on his statement and is intending and did intend and did impose tariffs on Canada and Mexico of 25% and an additional 10% tariff on China in addition to what was set up by Biden and others. All right, so yes, that story is true. Canada has now retaliated with 25% tariffs on U.S. goods. So not a good story there, and we want to dig into that further. Now, if you're looking at this from the precious metals perspective, you may want to also look at it from a scarcity perspective, where metals could become more scarce. Not that there aren't zillions of ounces of silver and gold already in the United States. There are, and retail demand has been very weak, and inventories at the bullion dealers has been very high. At coin shops is also very high. So this would take a while to play out as we burn through U.S. inventories. But these shipments that would be coming from Canada and Mexico and China will definitely reduce. Okay, there will be, based on the news today, there will be fewer products coming into United States from those three countries. And a lot of the silver comes from Mexico, and Canada also has quite a few imports in the United States, not the least of which are car auto parts. Okay, now just looking at that for a minute, you can see immediately how the tariff battles are going to cause supply chain disruptions. The last time we had supply chain disruptions after the health crisis, we saw the price of things go absolutely nutty. So this may, in fact, bolster employment in the United States, but it is going to wreak havoc in the supply chain. Now, I'll just read this article to you, parts of it from Scottsdale Mint. I think they are pumping a little bit here. They're saying you won't be able to get Canadian maples, etc. Well, I was just able to put, 1,000 Canadian maples in my cart, and there are plenty of Canadian maple leaves. And fewer Libertads. I mean, if I were going to act on this story, I would not be buying maple leaves. I'd be buying Libertads right now because the mintage is so much lower. But I am not acting on this story. I think there's a great deal of pumping going out there, and people are just assuming that this is going to have a natural effect on spot price. It is having somewhat of an effect in the futures market, and I'm not discounting the story, but I'm saying I would not use this story as your impetus to make large purchases of metals today. Let's see how we open Sunday night, what happens Monday and the following week. All right, Donald Trump has said, I have implemented 25% tariffs on imports from Mexico and Canada, and an additional 10% tariff on China. All right, and he's citing the act that allows him to do so. So what do they say? How Washington's trade war chess match could reshape your precious metals playbook. The Oval Office sent shockwaves through the global markets as 25% tariffs on Canada and Mexico, 10% on China, took effect today, Saturday, February 1st. While Washington debates border policies, precious metals investors are scrambling to understand what these sweeping changes will mean for these portfolios. Let's cut through the noise and examine. All right. So, North America's favorite bullion beauties, the Libertads and the Maples, just became tariff targets, so seeming to confirm that the tariffs will apply to precious metals. Basic math suggests a $30 silver coin could jump an additional $7.50 overnight. Okay, no. This is a pump piece, and I'm going to try to discredit this, but that isn't. You're not going to wake up Monday morning to $40 maples. Okay, I just don't think that's going to happen. But will happen is that these mints will be adjusting production processes, exploring different distribution channels. As I said yesterday, nobody is going to take a 25% tax when they can sell it to another country like China or India, for example, without those tariffs. All right, so how how do the tariffs work, and who pays the tariffs? Now, I'm not an expert on tariffs, but I believe it is the purchaser that pays the tariffs. The importer would pay the tariff on the good. And you might say then that other countries would continue selling at the same price. However, if faced with alternate choices, a U.S. importer is not going to pay 25% more for Canadian maples. They're going to go on to the next most popular coin or look for domestic production, which actually is not that high. I'll show you that in a minute. So what would have to happen is the foreign country, Canada, Mexico, or China, most typically would try to devalue their currency. And in this case, they'd be devaluing it more than it's already been devalued. But they'll never get to a 25% devaluation of their currency without being labeled a currency manipulator, and that would result probably in higher tariffs. So they are just not going to ship it because nobody is going to buy it at a 25% premium. So these tariffs will serve to shrink the supply chain of goods and metals coming into the United States. That is going to be very inflationary. They will explore different distribution channels. They will turn to U.S. inventories and optimize their supply chains. When the RCM, Royal Canadian Mint, does mint a lot of their coins in Canada, some production can be in the United States to mitigate tariffs. That's interesting. Not just coins, cast bars too. Here's the kicker. 80% of U.S. silver grain used in the bullion market comes from abroad, mostly from Mexico. So minting will be hampered to some extent unless they're buying inventory in the United States. Okay, and why the U.S. can't go it alone. While headlines focus on international trade shifts, it's crucial to understand America's domestic silver landscape. Can American mines meet our demand? And the upshot to that is absolutely not. 25% of silver comes from Mexico, 13% from China, which I don't believe much of that makes its way to the United States, and a much smaller amount from Canada. It's not even making the chart, which is interesting. Only 3.9% of silver production comes from the United States. Now, I don't know if this is primary mines or if that includes byproducts. That I do not know, but we don't make enough silver in the United States to supply ongoing demand for silver, which is in a structural deficit. Okay, this is written by Josh Philip Fair, and I believe he is the CEO of Scottsdale Mint. And he is touting, get your silver maples now. Well, you can get thousands of maples this morning at the same price you could Friday night, so he's pumping here. But I just wanted to show you that story. Okay, let's take a look at other commodities. Wood is flat around $80, the wood ETF, but still in an uptrend. If we look at platinum, look at the chart of platinum. So platinum is also not abundant and can be affected by tariffs as well. And look at platinum in the futures market. I think this is futures. At 1,030. I don't think it is that in the spot market. In the spot market, it's $979. So $50 premium in the futures market on platinum, which appears to also be predicting supply chain disruption. Let me get back over there. Okay, so stuff is going on with the supply chain. May not necessarily affect the spot price, is certainly affecting the futures price, and the story seems to be continuing. Now we are in full-fledged trade wars. Okay, that's what we are getting. And I was just looking here at the international shipping. Let's see, where is this link here? Supply chain disruptions and short-term market shipping rates. And I can't really go through this, but let me just do what the AI says. Tariffs can disrupt supply chains by increasing costs, changing supplier relationships, and creating regulatory challenges. So, for 10 regulations Trump deletes, he's adding one, and this is a big one here. Tariffs increase the cost of imported goods, okay, which can squeeze profit margins. What do you do when your profit margins are squeezed? Well, you look for other ways to get those profits back. You devalue your currency, you fire people, etc., or you cheapen your products, etc. Tariffs can cause increased production costs for domestic firms, which can be passed on to consumers. So this is, a valuable statement right here. Tariffs are inflationary, and they are being implemented dramatically and quickly, which will be inflationary, will also cause squeezes to the supply chain and raise the cost of transport and probably strengthen the dollar and weaken foreign currencies. Tariffs can disrupt long-standing supplier relationships. Companies may need to find new suppliers, which can be more expensive or less reliable. So another way that costs could increase. And let's see, companies need to comply with new regulations. examples of supply chain disruption: steel and aluminum tariffs, tariffs on the auto industry. You ready for cars to go up 30% in price? I don't think the auto industry can handle that. So this is going to have an effect on the stock market as well, and tariffs on global supply chains. Tariffs can lead to reorganization of supply chains. Here is a freight wave saying the freight costs could spike, and I can't get you a decent chart on that, but the cost of shipping from China to the U.S. is definitely going to spike on this news. It appears from this article. Okay, and spot rate for ocean freight shipping from Canada to the U.S. stood at 38.80, 38.37. Which was an increase of 162% 12 months ago, and is potentially going to increase again. I'm not going to get into that. Okay, ocean freights. Okay, here we go. This is what I wanted to show you. As of January 1, 2025, the rate for a 40-foot container from Asia to the United States was $6,000. Okay, nearly double what it was a few years ago. A 50% increase from the previous month. Let's see. Oh, there have been lots of reasons: Red Sea diversions, problems with the Panama Canal, etc. But this is a driver of increased costs as well. And here are shipping rates. Here is the chart pushing $7,000 now. You can see the healthcare crisis spike up to $14,000 for shipping costs. And then that has been dropping. But all we needed was the election and tariffs to be put in place to spike that back up towards $7,000, on its way potentially back to $14,000. What will that do to the cost of everything we import from abroad? Well, it's going to knock it out of the park. Okay, so we are in for some major disruptions here, and not necessarily in the silver and gold market immediately. I think it's a long-term story, but I think the uptrend will continue, and I think there could be a lack of inventory at the LBMA. Definitely, that's true with gold right now. Could also apply to silver. It could impact the paper short market. Anything can happen here, but I think the bigger story is that we need to prepare for spiking inflation. Now, metals, inflation going higher, the 10-year potentially going much higher. Get your money out of long bonds right now. Unless we fall into recession, I guess that could be the thing that spoils that. But this is also going to affect metals in the long run. So if you have a year perspective, if you're not buying a monster box of maples today, hoping to sell them for $7 more on Monday, take a long-term perspective and realize the world is being really disrupted by these tariffs. And hopefully we'll back off of this trade war that we're imposing right now. It's just too immediate and too drastic to be a good thing at the moment. You do want to get your money out of fiat, but dollar fiat in comparison to other countries' fiat is going to continue to rocket upward. Now, often that leads to higher rates, and that can suppress gold and silver, so keep that in mind. And if we head into a stagflationary environment, which could actually happen, then you would see rates higher, U.S. growth lower, and then possibly the Fed could stimulate, and then we'd be off to the races again to hyperinflation possibly this time. So there's a lot of information for you there, but I just don't think the story is as easy to understand as some of the big channels and some of the CEOs of metals companies are saying. Wait and watch. Continue your dollar cost averaging. If we have a sell-off on Sunday night, which often it's buy the rumor, sell the news, right? Well, everybody knew this was happening. They were strongly expecting this to happen. I personally didn't think that he would apply these tariffs to precious metals or oil for that matter, but looks like he has. So, a lot of the move probably has already been baked in. We could have a drop on Sunday night, which would be an excellent buy point for the long run. If we continue to rally up, then that is what we're doing, and silver is on the verge of a major break to 35 again, and gold all-time highs, as you see. So watch the dollar, watch the 10-year, watch the tariff story. Let's see what happens Sunday night. And gentlemen, place your bets. This is Louis out for the Bullion News of the Week. Have a great Sunday, guys. Oh, and by the way, if anybody wanted to buy those bars, you need to communicate with me through my email, losinglouis@yahoo.com. Okay, guys, I'll see you tomorrow. Bye now.